Yes, hello folks, this is the Danielcode video for Thursday the 18th of December. I wish you the compliments of the season as the Christmas week will be upon us next week. And today with this video we're going to try a new format, and you might let me have your comments on it in due course, but instead of inserting the charts into the videos, which is quite a slow process apparently, we're going to provide the charts to go with the videos in a separate format. For those of you who are on YouTube, there's a description link just to the right of the video, and that will give you a link to a PDF that's got the Danielcode charts in it that we're using for this presentation. For those of you on the website, there's a box on the landing page which will say charts for the 18th December video. So click on that, open up the PDF. Go ahead and print it, and then you can follow through the chronicle of what I want to talk to you about. So we'll start off with gold today. That's been a very exciting move for us, and the first chart, which is labelled chart number 1, is the daily chart of COMEX gold. And you can see that we had a TO3 buy signal on Friday the 8th. So that's 10 days ago we've been in this trade. And you should know by now how to handle the T3 signals, but if you don't, there is a separate T3 video at the Danielcode website. But the lazy way of trading, which is very good for people who are not full-time traders, people who go off to work, have jobs, what have you, is simply to buy the high of the setup day or sell the low as appropriate with the signal. For this signal, the TO3 signal was posted to the Danielcode website for Friday the 8th, and was elected on Monday the 8th, Friday's high was 773.30, so you should have been buying that at about 773.50, 773.60. Allow a few ticks the other side of the daily bar. For full-time traders, you would have seen the turn coming much earlier. It was a Danielcode turn as well, with the stochastics very oversold. Pretty good setup for us. So anyway, we should have bought that at 773.50 or 60 or so, and it closed on Wednesday at 869. So that's about a $96 rise in gold price since we had. That's from the entry on the TO3 signal. So there's something approaching $10,000 per contract in that trade. I want to draw your attention, if I could, to my latest article, which is available at Financial Sense and on the Danielcode website. And you'll see in there we talk a bit about the phenomenon that has happened when TO3 signals are not elected. You often get an acceleration of the existing trend, and that's exactly what's happened here. We've had a series of potential sell signals that were not elected, and the trend has just accelerated further and further. We're very close to getting a monthly buy on gold, and Huey's even more advanced. So for gold bulls, this is their hope. I said, I think maybe 3 or 4 weeks ago, that the pattern that we're setting up was bullish, and we then got the TO3 signal to confirm it, and whoosh, away it's gone. Moving on, we'll have a look now at chart 2. This is the 4-hour chart of COMEX gold on the Danielcode website. And you'll see that there are 3 arrows on it where I've marked the 3 relevant highs, all of which have stopped at a Danielcode number, recognised it, and vibrated at that number. Now, this is a phenomenon that happens all the time. It's how we validate the Danielcode sequences. I say that all markets turn at the Danielcode numbers, but they also stop and vibrate and recognise these numbers. So on the 4-hour chart, you can see that happening much more clearly, and you can see also that every number on there has been ticked off. We got a short-term high at 861, the next one at 874, and on Wednesday at 883.80. Well, they're all Danielcode numbers, as you can see from that chart. I want to show you now how we deal with these charts. The blue numbers don't change. We're now on to chart number 3. The blue numbers don't change unless the Danielcode program changes them. So unless I create blue numbers, they stay the same. If the market's past them, you just take them off your chart and put on the next one. But the red numbers and the black number embedded there, which are the retracements, they will change with every new high, because if we're drawing them to a swing every time we make a new high, then that group of numbers, the red and the black, are invalidated and we need to put new ones on. So in chart 3, I'm just showing you here briefly the process we go through with these charts. For chart number 3, we've removed the old numbers. We've taken off the red retracements, which are no longer valid because it's making new highs, and we've removed the blue lines that it recognized and vibrated at but didn't affect a turn at. So you'll see there, move on now to chart number 4, you'll see that, still looking at this 4-hour chart in gold, there are 3 dominant swings in the last pattern. In other words, we could draw our retracements to 3 separate points, and I've marked them with red lines. Now, whichever ones we choose, you will find that if you draw them properly, they'll be very close, because all of these swings are fractals of each other. And when you use the full Danielcode sequence, which I show you on the Danielcode charts of the website, it's very common for a retracement in one sequence to equal a different retracement in the other swing, because all these swings are actually related to each other. They're all fractals of each other. But there in chart 4, I just show you how we do that process. And then in chart 5, I've shown you how to put on the retracements for the larger swing. And there we're using 37.5%, 50% and 62.5% retracements. Now, they're not actually the retracements I use for the Danielcode. They at one time were the exact retracements, but they've morphed over very, very long periods of time into slightly different numbers, which I use for my subscribers. But they are the most common numbers, and if you use those for your retracements, you won't be very far out. So you can there see from that how we bring the retracements up to date. We have the choices between shorter term swings and longer term swings. It really won't matter greatly which one you choose, because they will give you the same support and resistance points. Some people like to put on, this is a Joe Di Napoli technique, he'll actually put on the retracements from every high to every swing low, or vice versa, from every low to every swing high, and he looks for places where there are conjunctions. That works very well on very short term charts. It doesn't work so well on the longer term, even daily frames that we trade. Moving on now to chart number 6, and this is the US dollar trade that we're in at the moment, and you'll see there that the TO3 signal was posted there on December the 5th, which was a Friday. So the way to enter that trade then was on the Friday to sell Thursday's low, and you can see that trade was not elected. Now, it's quite common for TO3 signals to be not elected. But what it does, the TO3s are valid for 2 days. Yeah, they sometimes take longer, but for our protocols we only allow them 2 days to elect the signal. So on Friday we were unable to get an entry because it didn't take out Thursday's low as we require. So then on the Monday what you'd have done is you'd have sold Friday's low, and that was 86.37 or 38. So you'd have been selling about 86.35 or thereabouts, and it's now down to 78.38, courtesy of the Fed's zero interest rate policy, which is seeing the US dollar have a heart attack. And that trade's worth almost $78,000 a contract. So super trades, absolutely the sorts of must-get trades that you need to have. Trading is very asymmetrical, returns are skewed. You don't get a nice even distribution of you know, everyone's wish is to make $1,000 a day. It doesn't happen. You have a lot of small trades, quite a few not so nice trades, but it's these occasional monster trades that you've absolutely must get to build up your P&L. And although these are huge trades, they're not the only ones. We've had 3 or 4 of these in the last 3 months, so volatility has been a real gift for traders. It's been quite exceptional. I'd ask you to visit the Danielcode website at www.thedanielcode.com, where you can see my latest article in Financial Sense, where these matters are discussed in more depth. And we bid you a happy Christmas.